What's up, guys? How you guys doing? In this particular video, I'm going to be showing you the best time frame for crypto trading. So I often get that question a lot. What's the best time frame? What's that ultimate time frame? Like that magic time frame where you'll just be able to see the market clearly and then you'll be able to take trades, you make profits. Well, there's nothing like that. There's no perfect time frame, there's no magic time frame. You just have to combine time frames together to be able to get a signal, or to be able to get into a trade, or for your strategy to be effective, whichever. So in this video, I'll be taking you through different time frames depending on the type of trader that you are. If you're a swing trader, if you're a day trader, if you're a scalper, there is a time frame that is most effective for you. And I'm also going to be explaining how to use the time frame. If you're ready, let's dive in. So the time frame that is going to be the best for you depends on the type of trader that you are. If you're a swing trader, then your higher time frame should be the weekly time frame. It helps you to decide whether to be a bull or a bear. Then the intermediate time frame should be the daily time frame, which is the 1 day time frame. It helps you to decide if you should buy now or you should wait. Then there is the lower time frame, which should be the 4 hours time frame. Helps you refine your entry before you execute a trade. Let me show you how that works. So this is BTC USD. So if you're a swing trader, what do you do? First step, you need to decide whether you want to be a bull or a bear. So the first thing you do is to add an indicator, a MACD indicator. You could use the MACD divergence indicator or the MACD indicator. It doesn't matter. It's just the same thing. So if you look at this particular chart, you will find out that which should you be, a bull or a bear? Most likely you would want to be a bear because we're in bearish territory. The histogram is red, it's negative. So it tells you that we're in bearish territory and you should be a bear. That's it. So there are people who often want to say they are constantly bullish. You shouldn't be. The market should tell you what you should do. Your job as a trader is not to predict the market. It is to follow the market. And one of the biggest mistakes people make is to try to fight the trend. They think, whenever I'm talking to traders, one of the most common mistake that they make is they think, I think if Ethereum gets to this price, it should reverse. That's not how it works. The market doesn't care about you or what you think. And that's just the reality. Most of the losses that I've encountered as a trader, even back in the day, came from when I tried fighting the trend. You should follow the trend, not fight it. That's the mistake people make. So this is bearish territory. So you should be a bear. So what do you do? Then you go to the other time frame, which is daily. The daily is to help you to decide where you should take a short position. And you could already see that the histogram for the daily is already showing that the bulls have lost momentum because they are not the most dominant people in this particular trade. It is the bears. You are in bearish territory on the weekly. So the bulls can try to put up a fight, but they are not strong enough, and it's reflective here. So what do? You're looking at a point where you want to get into a trade, and how do you do that? You can use support and resistance, or you can use other blocks. So you're looking for a point to get into a short position. So let's use an order block by this guy looks all go. Let's see where other blocks are in this particular trade. Okay, I'm using more than 2 indicators, so let's see. So you could see that this area has an order block, a bearish order block. That's why it's red. So what do you do? As in, if you've gotten to this point, let's say it got to this point, let's say somewhere around here, you know that there is a bearish order block here. So we've already put a line on it. So what do? Then we go to the 4 hour. The 4 hour would help us to be able to refine, you see, when it got to this point. So you could instantly see that it got to this point and it started to give you a lower high. You could instantly see it here, a lower high. It just started to give you a lower high, you see. So it was already giving a warning sign that this particular move is not sustainable anymore because the bears have lost momentum. So you then have to look at it and say, where do I get in, since this particular chart is already telling me that the bulls don't have strength and that there's an order block around this area. So what do you then do? You can decide to get in at this same point of the order block, or you can decide to wait and use a trend line break. When it breaks the trend line, then you get in. A trend line break, it shows you that the bulls have finally lost the little advantage that they have. So this is how it works. Believe me, if you trade this way, you would make very little losses because you're trading along with the trend. You're not trying to predict the trend. You're just following wherever the market is going. This is how you do it, guys. Believe me, if you trade this way, you wouldn't make mistake. And you would also do the same thing for other time frames. You will do the same thing for the daily. Let's just quickly do the same. Let's just quickly do the same, and let's say you are a day trader. Your higher time frame is 4 hours. So 4 hours time frame, what should you be, a bull or a bear? You could already see that this is showing a bullish momentum on the 4 hour. So what should you be? Even though the overall trend is bearish, but for this particular time frame, it's showing you that bulls have some strength, as in they are not allowing the bears to completely run the market to the ground. So you choose to be what? To be a bull at this particular time frame. So the next thing you do is to go to the lower time frame, which is 1 hour, and then you look at 1 hour. Okay, the 1 hour helps you to decide where exactly you want to get in, as in helps you decide if you should get in now or if you should wait. So that's what the 1 hour does for you. So we've already chosen to be a bull at this point. So what do? Let's use the other block again. You could use other blocks. You could also use um, support and resistance. Let's use support and resistance by this guy. Looks all good. So you could see that we're already at the area of resistance. Although in the 4 hours where we have chosen to be a bull, but this particular time frame no longer agrees with that of the 4 hour. So what do? We'll have to leave this. It doesn't agree anymore. So even if we decide to take this trade, we're most likely going into a loss because the higher time frame, which is the daily and the weekly, are already bearish. So this type of trade, you're doing what is called a counter trend trade, and you want to get in and out very fast. That's your goal. But if it doesn't align, then you definitely have to be careful. So we could still take a bullish trade. Probably we could take it somewhere around this area where there seems to be a support, but it's going to be very risky because it could break and go further down. So we want a situation where the time frames are aligning together. So that helps you to be able to take a better trade. There is no 10 minutes time frame on TradingView. For you to be able to do that, you would have to use another chatting platform called Go Chatting. Some people prefer to use the 15 minutes time frame since it's the one that is readily available on TradingView. But if you want to be able to see what other people can't see, then the um you need the you need the 10 minutes time frame if you're a day trader. So so if you look at this, you will see that this is already showing us that the bears have gotten weak, and now sellers have taken over even on this 10 minutes time frame. So we could wait, and based on the fact that the 4 hours is bullish, we could wait for this histogram to turn positive on the 10 minutes before we get in, and we could also wait for the histogram not to turn negative on the 1 hour for us to get in. So these are the things that you actually need for you to be able to follow the trend. And if you're a scalper, it's basically the same thing. Your time frames are 10 minutes. 10 minutes sets the overall direction, bull or bear. Intermediates confirms straight timing. You enter with wait, which is 5 minutes. Then the lower time frame is 1 minute for precision. So you need it to be able to get into a precise trade. So this is Crypto Wolf. I'll see you in my next video. Bye.